How the world's second largest crypto exchange at $32 billion went from hero to zero in one night. A tale of greed, lies, and betrayal that shook the entire financial world. FTX, one of the erstwhile crypto leaders, spectacularly collapsed in 2022 from financial mismanagement, fraud, and a toxic culture of secrecy. The implosion wiped out billions of dollars in investor wealth and shattered trust in the crypto industry. This is a story that reveals the frailties of both the industry and its regulations, the dangers of unchecked power, and how blind faith in charismatic leaders can enable wrongdoing. It's not just a crypto scandal, it's a lesson for investors, regulators, and anyone mesmerized by promises that seem too good to be true. Before getting into the reasons for this collapse, let's have a look at what this FTX is. FTX is among the world's largest cryptocurrency platforms, where anyone can buy or sell cryptocurrencies. It was easy to invest further as more investors got interested due to the emergence of digital platforms, where one received a digital wallet, which offered them the right to store cryptos directly within the personal account. Customers would be able to do this separately with the generation of a software-based or hardware-based crypto wallet, which had no relation to the platform at hand. Here they explain the reason for this great initiative.
As a decentralized medium of exchange, we're seeing the power of cryptocurrency unfold in real time. People all around the world are able to contribute crypto directly either to the Ukrainian government through their public addresses they've posted, or to relief organizations that are on the ground.
Soon after its formation, FTX quickly gained its market by buying struggling competitors such as Liquid Global, LedgerX, and Blockfolio through high-profile acquisitions. FTX used aggressive marketing campaigns such as Super Bowl ads, celebrity endorsements, and naming rights to the Miami Heat's arena. Such marketing campaigns were promising people to put their money in these accounts and earn a higher yield than the average bank.
It became an obsession. More sports teams, more sports celebrities, different kinds of properties that we could put our name on.
In early 2021, cryptocurrency began to boom, and the price of Bitcoin reached as high as $64,000 from $10,000. Customers started to pay attention, and venture capital groups invested nearly $2 billion in FTX. What is FTT?
The FTT token is basically the token for the platform FTX.
The benefits you get from the FTT token is you get reduction in trading fees.
I invested about $200,000 in the FTT token.
SBF would regularly show that he was personally buying FTT token, so I held it.
Cryptocurrency platforms generally issue their own tokens to bring in new clients. The value of the token rises as more people invest, and the demand for the digital token is higher, so the platform offers perks. FTX released its own digital token called FTT in May 2019. FTX also offered discounts and NFT rewards for staking FTT.
FTT coin is the cryptocurrency issued by the FTX exchange.
Now we are going to explore the downfall of FTX. The price of Bitcoin began to plummet severely in late 2021 and early 2022 from its peak in early 2021. Other cryptocurrencies began to follow suit. Major platforms began to shut down, but FTX was an exception, having been busy acquiring competitors.
A substantial portion of all the FTT tokens in existence were sitting on the balance sheet of Alameda.
However, the winning streak of FTX came to an end, with CoinDesk publishing an article in November of 2022 mentioning that Alameda Research, a firm also co-founded by Bankman-Fried, was seriously dependent on the digital token issued by FTX for $5 billion in assets, and the two companies were seen to be much too intertwined for their balance sheets. The balance sheet had $9 billion in liabilities and around $900 million in assets, with poorly labeled entries showing a negative $8 billion balance. Alameda borrowed as much capital as it needed from FTX. It was later found that this funding was mostly from customer deposits, and the trading firm would borrow money routinely from FTX customer assets.
Their presence there's such a substantial presence on that balance sheet, was a suggestion that perhaps this is a house of cards.
SBF engineered the price of FTT by directing Alameda to buy large amounts of the token to maintain its price.
FTX and its sister companies did not report balance sheets on assets and liabilities, which are standard financial reporting procedures. As a private company, FTX's balance sheets were never audited, so there is no record of cash flow or assets that demonstrate the company was able to offset liabilities or show customer assets to be secure. FTX's balance sheets also showed assets that were less than Bankman-Fried had estimated.
What the document showed was that in a very powerful way that there was a very strong financial entanglement between these two companies.
Binance, a cryptocurrency exchange platform and competitor of FTX, agreed to buy out FTX on November 8th before the full extent of its problems went public. Changpeng Zhao, CEO of Binance, was one of FTX's first investors. However, the deal fell through, and Binance cited mishandling of customer funds and US investigations as reasons for backing out of the acquisition.
Ian Allison, our reporter, started hearing Alameda, this trading firm owned by Sam Bankman-Fried, may not be on the most solid financial footing. Ian heard this from a source. As a journalist, you hear a tip, and that's great, but the challenge is, well, then how do you prove that?
The collapse of FTX in November 2022 lasted 10 days, from November 2nd to November 12th. It began with the CoinDesk article and the leaked balance sheet. Binance first announced that it would sell all its FTT tokens due to the mishandled and blurred funds.
We were seeing a run on the bank start, and that was leading to $4 billion a day of client withdrawals. At that point, we started calling prospective, sources of financing because I was nervous.
But this was not the whole story. The value of FTT plunged drastically, making it hard for FTX customers to withdraw their money in their accounts. Other people also feared for their investments because other big collapses happened, such as those in Celsius Network and Voyager Digital. In this massive withdrawal, FTX lost billions of dollars. Bankman-Fried ordered Alameda Research to sell assets to cover the needed capital from the withdrawals, and he also looked for financing to cover the gap of about $8 billion between what was owed and what could be paid. On November 8th, FTX disabled the ability to withdraw money through the website so that hundreds of thousands of its customers could no longer access their money. At this point, when FTX was unable to cover the gap of $8 billion, it filed for bankruptcy. FTX crashed due to mismanagement of funds, the lack of liquidity, and large volumes of withdrawal. Binance said it would acquire FTX to avoid a further market collapse, but pulled out of the deal just days later, after more news outlets reported that the company had mishandled customer funds.
I requested all withdrawals of all my assets, but none of them completed. None of the withdrawals ever came through.
You're just helpless. Like, what do I do? I was just in so much shock that that could happen.
I had a huge amount of money, obviously, on the exchange, and I thought, okay, there's something wrong. Why would he stop withdrawals? Because in exchanges, if everyone takes the money out, all that's what should be left is the exchange assets. I thought this seriously wrong. I felt really sick.
Bankman-Fried used FTX funds to buy personal luxury items, finance elaborate advertising campaigns, and make political donations. Authorities arrested Bankman-Fried on the 12th of December of 2022 for multi-fraud charges with FTX. 8 criminal charges from the U.S. District Court indicted Bankman-Fried regarding money laundering, wire fraud, campaign finance violations, and securities fraud. Bankman-Fried was set free from his custody with $250 million worth of bond, the largest recorded in history. As of January 2023, assets worth $5 billion have been recovered in cash and liquid assets. The total estimated missing assets is $8 billion. On November 15, 2022, FTX investors filed a class action suit against FTX and its celebrity endorsers. The civil lawsuit alleged FTX engaged in false representation and deceptive conduct. It also alleged that FTX conducted a Ponzi scheme to misuse funds by transferring customer money between entities. How this will affect the digital currencies. While the overall cryptocurrency demand declined by the FTX news, Bitcoin still managed to roar back as of January 2023 with above $21,000 values, while values had crashed below $16,000 by November 2022 as that FTX news was breaking. The Securities and Exchange Commission, along with the US Congress, plan to discuss regulations of the cryptocurrency industry after the arrest of Bankman-Fried. If a cryptocurrency exchange files bankruptcy, there is no backup, unlike US banks where the government insures the funds up to certain limits. More cryptocurrency companies have hit a rough patch. On January 20th, 2023, cryptocurrency lender Genesis filed for bankruptcy. Genesis had nearly $3.4 billion in debt to its creditors after the cryptocurrency market fell with the FTX news. In the end, Mr. Fried admits that he could have done things differently. This is what he said.
I made a lot of mistakes or things I would give anything to be able to do over again. I didn't ever try to commit fraud on anyone.
Well, the FTX collapse was not just a collapse of a company, but served as a wake-up call to the entire crypto industry. It clearly showed the cracks within, the dangers of blind trust, and the price of greed. Every scandal leaves us with a lesson, but this reminds us to demand the transparency and accountability that leads to the importance of due diligence, whether within the realm of crypto or beyond. So the FTX saga is but a forgotten tale now, but its waves will be felt around here for years to come, and the question is, will the industry learn from its mistakes, or are we doomed to repeat history?